my next question, that presents itself as a considerable burden, especially on SMEs, because in some cases the threshold is pretty low. So, you're just starting off a business and you're trying to expand into a neighboring jurisdiction. And then suddenly you have the burden of, maintaining transfer pricing documentation. The principles is one thing, you can figure that out, but the contemporaneous documentation of all those transactions it presents itself as quite a burden, not just on the company, but on the tax offices as well, who have to police that. How sustainable is that? What do you guys think about that? Neelish, what do you think?
Right now, see, the transfer pricing regulations today in different countries, they are there.
Mm-hmm. Mm-hmm.
Now, Pillar 1, Pillar 2, they are applicable only to very big MNCs. Pillar 1 is applicable only to MNCs having 20 billion turnover per year.
Mm-hmm.
Pillar 2, 750 million euros. So SMEs are not directly covered there. So SMEs, whatever is currently applicable in different countries, they will be governed by those regulations till the time they are changed.
Mm-hmm.
But I don't see Pillar 1 and Pillar 2 being made applicable to SMEs very soon.
Okay.
That will take a many years. First, they have to see Pillar 1 and Pillar 2, how they are working, whether different countries are agreeing, happy with it. Because Pillar 2 means, you must have read that Ireland has increased its tax rate to 15%. Mm-hmm. So now, a country which is a tax haven, if I park my profits there, it is not going to work. I have to pay 15% either in my home country or in some intermediate jurisdiction. And if that happens, that no tax jurisdiction is of no value to me. So the no tax jurisdiction itself may enact 15% tax. Otherwise it will lose tax revenue to other countries.
Yeah, but I get what you're saying, but there are some jurisdictions, for example, Indonesia, where there is no threshold for transfer pricing. So like in Singapore, it's 10 million, but in Indonesia, it's 0. So everything you need to, so I'm just thinking that if more countries are as aggressive and adopt that approach, an approach that basically drags SMEs into the TP net, that presents itself as a challenge to companies. So it's with that in mind. Akul, do you want to comment on that?
Yes, Darren. Yes, you're right. In fact, there has to be a balance, and I 100% agree, because there are taxpayers which are really small and medium enterprises. They definitely have a burden to kind of collect all this information, and transfer pricing is never a small bit of information. It is a compilation of a lot of information which has to go to substantiate your transactions and your prices. One is the way you look at it, Darren, is that if you look at it only as a compliance, it is definitely a burden. But if you look at it, again, as a consultant, we often come across clients discussing this as well, is that if you look at it as an opportunity to introspect your own pricing. So, a company is performing a set of functions, and because it's a part of a multinational group, it does not know whether it is getting enough profits of its own, because there are employees, who have some profit incentive, whose remuneration is based on profit incentives. So if everything is like a kind of, looked at as a whole, as a group, and internally within the corporation, they do not know how much profitability is earned by which company. They won't be able to kind of really implement any tax efficiencies, cost efficiencies there. So that could be another advantage, if not a direct benefit. But a compliance, once you're doing a compliance, once you're going deeper into your your functions, assets, and risk, and try and understand what value add is being done by a particular company and what value add is done by their corresponding related party. So that way they can definitely have some efficiencies. But yes, that does not undermine the statement that there should be this is a big collection of information which has to be compiled and presented to the tax authorities when they ask for it. There has to be a balance between how much efforts have to go into transfer pricing for smaller transactions, which may not have a lot of impact on on the taxability, even may not benefit a lot to the tax authorities as well.
And Darren, in India also, SMEs are within the net of transfer pricing, because our thresholds are almost, it is like reporting documentation threshold is only 1 crore rupees.
Wow.
How much
How much
US
is that?
dollars?
Yeah, how much is that in US?
US
Which
dollars with
One
would be
krona.
that will be about 15,000,
Dollars?
17,000. Yeah.
Wow, that is, you're right, that's pretty low, yeah.
And because of that, in last 15 years, there has been a lot of litigation on transfer pricing in India.
Mhm.
Lot means lot.
Mhm.
Yeah. And you are
Mhm.
right that because of that, SMEs have suffered, of course,
Mhm.
they've suffered the brunt of litigation
Mhm.
and the cost of compliance documentation. Yes.
Mhm.
But that is not going to change now. India is not going to increase the
The threshold,
threshold
yeah.
and
Yeah.
remove SMEs out of the transfer pricing net. We are not
Yeah.
hearing anything of that kind.
Yeah, I agree with you. I think that, yeah, like country by country reporting, this 50% minimum tax, they call, it's 750 million euros or whatever. But that's just the starting point. I think over time you'll see mission creep, and you'll see tax authorities use it as an opportunity to slowly but surely lower that threshold to bring more in the net. Because, let's face it, most countries in the world right now have a balance of payments, sort of deficit going on, and they have expenses arising out of the crisis that we just emerged from. So they have a lot of expenses. They have a balance sheet to plug. So tax revenue, all eyes on tax revenue. So the more you can collect, the better and the more attractive it is from a political point of view. So yes, you may start the conversation at big multinationals, but there is a huge incentive to just lower it to get more in that net to collect more revenue. So yeah, absolutely. So with that in mind, what are the key trends? If you had to pick up like 3 key trends within the transfer pricing space for the future to pay attention to, what would you say they are, Nilesh?
Yeah. What actually currently I'm practicing in India. So
Yeah.
there the tax authorities are looking at profit split method, which is one of those prescribed method. Seriously, like they want to look at a method which views the transaction from both sides, from the side of both the associated enterprise participating in the transaction, whereas other methods are mostly one-sided methods.
Okay.
So profit split method, authorities are looking into what is the arm's length profit from a particular transaction and how it should be split between the two entities participating in the transaction.
Right.
That is, I would say that is one.
Yeah.
Second would be this, of course, intangibles. Intangibles is always a troublesome issue. Intangibles, because of OECD guidelines, very detailed guidelines. There is something called DEMPI, as who others would know, DEMPI: development, exploitation, protection, maintenance, and enhancement of intangibles. Meaning that any group entity which is just a legal owner of the patents or the intangibles will no longer be entitled to book all the royalties or income, super income or premium profits from exploitation of the intangibles. Entities who participated in this DEMPI functions, all those entities will be entitled to.
Okay. So that's your sense as to like the key trends to pay attention to.
This is second thing. Yeah. And third is financial transactions like corporate guarantees. Then because of COVID, this new model has come up. They call it what is the name? Intra-group treasury management.
Yeah.
And captive insurance.
Yes.
Because of COVID, some MNCs were not able to get insurance externally at a reasonable premium. So they have set up captive insurance
internally.
entities. So in India, I'm seeing mainly these 3 trends, which are novel, new.
Okay. Great. Thank you very much. And cool. What's going on in Canada? Like, what are the 3 key trends from a transfer pricing perspective that we need to keep our eyes on?
And so first, my apologies for the wrong number. I mean, my calculations were not correct. 1 crore is equivalent of about 135,000 US dollars. Just wanted to, no, it's still, it's still a very little small threshold, but it's not that what I mentioned initially. In Canada, again, Darren, the threshold for documentation, although that's not your question, but is pretty low. So one is that there is virtually no threshold for transfer pricing documentation. There are penalties. Yes, there is a threshold of 1 million Canadian dollars to report those transactions to the government along with a tax return. But most of the taxpayers, they are not aware that that you need to, and there are penalties if you don't maintain, and the tax authorities, if they do adjustments beyond 10% of your gross income, there could be penalties. So transfer pricing documentation definitely is one of the factors which I would emphasize is key on this. And other areas which one is recharacterization, where we recently had an important case law as well, but that is more from the tax authority side, how they look at the transfer pricing mechanism structure between the entities. But from a taxpayer's perspective, intra-group services is something which we often come across with a lot of companies providing those services across the border or receiving it from the US. So that is one, although taxes, it is one of those which is difficult, where all those 5 methods which we generally have in transfer pricing, it is difficult sometimes to kind of substantiate the arm's length basis on using one of those methods. It is eventually, the TNMM, which is the residual method, has to come in to substantiate intra-group services or management services. So that is something. Otherwise, I think Nilesh has picked up very well. All these intangibles is an important one from a Canadian perspective as well. Although most of the business happening between Canada and the US, it is the US which has the headquarters, and they hold the intangibles either internally or elsewhere. And Canada is more of like a support, functions that we see mostly. But yes, intangibles is something where CRA has been focusing, closely on. So.
Okay, that's great. So, from my point of view, I think, absolutely most jurisdictions that typically didn't pay attention to transfer pricing are increasingly doing so. The thresholds are, some jurisdictions are high, some jurisdictions are low. Generally speaking, I see them being reduced, generally speaking, to bring more businesses into the net for obvious reasons. And I think that presents itself as a greater burden of compliance especially for SMEs, and something for them to really pay attention to, because the capacity within the tax offices is being enhanced. So the risk of audits increasing as well. And previously, you could probably, in certain jurisdictions, you probably get tax officers who weren't familiar with transfer pricing, especially in emerging markets, but no longer the case. Increasingly, they're being trained up, and they know what they're doing. They know what they're looking for. You can't play games you can't manipulate things unnecessarily like you would have historically. And, just something to pay attention to. And on that note,
so if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.